All right. Hi, everybody. As she said, my name is Haley Corbett, and I am the Family and Consumer Science Agent with Extension in Columbia County. So I'm assuming most of y'all are probably on UF campus. So I'm about an hour north of you in Lake City. And so I do volunteer income tax assistance every year, or VITA for short, because it's a lot less to put out of your mouth every time you have to say it. Every year with Extension, and I do run the state lead. So we have different Extension offices here in Florida, as well as we partner with the University of Georgia to provide this service. And we have students from FSU that help us to prepare those returns. But today I want to give just a little bit of information about your taxes. This is more of a general thing as we go through. If you have more specific questions, you can always email me. And I'm always happy to help you with anything that I can. The first thing I always like to start with is what Extension is. So all of you work for the University of Florida, most likely, but I have a feeling a lot of y'all probably don't know what Extension is. So there's the teaching, the research, and then there's Extension when it comes to the University of Florida. So my job is to literally take all of the research that y'all do, put it into a way that is usable and understandable by the general community, and provide it to them. So whether that comes in classes or one-on-one counseling or anything like that. I didn't say this at the beginning. I'm also an accredited financial counselor. So when I do VITA, I also help counsel people on anything from their budget to debt management to handling their money in different ways, all of those kind of things. The only thing I'm not allowed to do as an AFC is give you retirement planning. So I can tell you your retirement options. However, I cannot actually do the planning piece for you. You do have to go see a certified financial planner for those. But I'm happy to help with anything else. So I talked about I'm here for taxes and I do VITA and I'm financial, but also with Extension, because I'm a family consumer science agent, I do so many other things. So I do food preservation, so canning, cooking classes, nutrition classes, anything like that. I'm also Serve Safe certified. So if you go into a restaurant and you see those big plaques on the wall that say they're Serve Safe certified, I am an instructor and a proctor for those people that have that certification, and be glad they have it. Protects your food. I also do the first time home buyers class for the state of Florida. There's a bunch of us agents that work together and we are HUD certified to provide that class. I'm trying to think what else I do because I know I'm missing something. I kind of do whatever the county needs, and I'm happy to help in multiple ways. Oh, I do cottage food law as well, if y'all have ever heard of that. So I also play in that field as well. I have a bachelor's from UF in microbiology and cell science, and I have a master's in public health from UWF. And then, like I said, I'm an accredited financial counselor. So I kind of play in all the different realms and how everything comes together. And that's exactly what I try to show the community. All of it ties together. So today we're going to talk about your money. And we all saw it come in last year. And now we got to report everything we got. So let's talk about the different pieces of that. So the first thing I always like to point out is everybody's tax return looks a little different. Okay. You're probably thinking, I don't know. I'm telling you, I do retirees returns that only have Social Security, and this person and this person's do not look the same. Okay. And that's all they are reporting. Okay. So everybody's tax return is different. So there are general guidelines for all tax returns. However, each individual thing can make it a little different. Also, depending on circumstances that happen to you during the year can make things different. Oh, did anybody have a kid? How about sell a house? These are all things that we have to think about when we're doing our taxes, okay? Because those little differences can make a difference on your tax. Now, there's rules with houses that if you are married and you're filing, you might be able to have an exemption and not have to put the sale of your house if it's your main house on your taxes. However, if you make over a certain amount, and right now with the housing market being what it is, you might have, that's something else you're going to have to think about. So there's all these different pieces. So today, everything I give you is going to be basic. And you're probably thinking, well, how does that help me? Well, because everybody still has the same basics, okay? So we're going to talk about all the basics of your return and what you need. And then if you have anything more specific, you can always email me and I'm happy to help. All right, so this year, we are officially in tax season. Can anybody tell me when tax season actually began this year? you, Brian. Yep, it is 1/29. January 29th was the first official day of tax season. However, with that, we all think that means if I file my taxes, everything's going to happen, right? Have y'all heard of the earned income tax credit or the child tax credit? Anybody ever heard of those? So if you file right now, you actually will not get your refund until they release those in the middle of February. And until then, your refund does not come. So even if you file early, sometimes you still have to wait. So remember those kind of things. Another thing is tax deadline. Last year it was April 18th. This year they put it back to the 15th. I'm not exactly sure why they changed it last year, because it had been the 15th for long time. And they moved it last year, but this year they put it back to its traditional April 15th. You must have either your taxes filed or an extension filed. But here's the thing that a lot of people miss. Just because you file an extension does not mean it gives you an extension on what you owe. So know that if you file an extension and you owed something, you're now going to have to pay interest on that money that you have not paid them. Okay, so you want to make sure that you get your taxes done as quick as you can so that you know either how much you're getting back or how much you owe. Also, another fun thing about the government when it comes to your owing or earning. So if you owe them, you have to pay interest. If they owe you, do you think they give you interest? No, they do not give interest if they owe you. So you get the exact amount, but they do charge you interest. So make sure if you owe, you always have that little bit extra. So in Florida, we are, I call it blessed. Okay, we are one of less than 20 states that do not have state income tax, which is so nice. I told y'all I partner with UGA, so I do some state income taxes with them. But in Florida, we do not have them, which is a blessing. So the federal tax system is literally a pay-as-you-go system. Well, what do I mean by that? Anybody get their paycheck in the last 2 weeks? Okay. Was there a line in there where taxes were taken out? Oh, so every time you get paid, you're automatically paying some of your taxes, right? Okay, that's that whole pay-as-you-go system. Now, we elect how much we have taken out based on our W-4, and we're going to actually show you a little tool that can help with that too. And that helps with our taxes at the end of the year, whether you get back or have to pay in or even break even, which in my favorite is to break even. Okay, so the difference is if you overpay, you get a refund. But here's the thing. If you let the government have your money for a year, do they give you any interest on it? No. So you're kind of giving them a free loan if you think about it. Okay. Now, if you're really close and you have, less than $100, even, depending on your things, could be 500 if you have some capital gains or anything. You want that money to kind of stay because it helps balance everything out for you. Okay. But if you're like getting back $1,000, $2,000 and it's not child tax credit because you can't get rid of those. Okay. That's a whole nother refundable credit thing. But if it's something else, you're just getting it back from your paycheck, you probably don't need to have quite as much taken out every year. Okay. Now I have clients that tell me, but I love it. It's a way to save that I can put in an account and I don't think about it till I get back every year. If that's your savings account, I'm not knocking you, okay? Because at least you have a plan to make sure that you have the money to save. But remember, if you put it in an actual savings account, the bank is going to give you interest. Now, I used to say this is a much better deal because the interest rates were greater. However, our account interest rates are not near what they used to be. So you pick which one's better for you. If it's to put it in your own savings and earn that little bit of interest, or if it's to keep it here so that you know it can't get spent. The other side of that is you underpay, which means you have to send in money, okay? Sometimes this is based on just how much money you make, which bracket you go in. Maybe you didn't have enough withdrawn. I know a lot of people that do 1099s think of, and I'll show you an example of that for them in a minute. That doesn't have any taxes taken out of it. Well, they don't think about that when they're getting paid that way. Well, then at the end of the year or the first of next year, when they file their taxes, guess what? They get hit with a big tax bill because the pay-as-they-go system didn't take out the pay-as-they-go piece, okay? So now they're having to pay. So these are pieces you have to think about. And I also like to point out, I said your W-2s earlier, but if you're retired, most companies, retirement companies, unless you elect not to have any funds taken out, are also going to take some taxes out because they know that the federal government is a pay-as-you-go system. So they want to make sure that you're doing that. And then if you're self-employed, that's another one. You actually want to plan for quarterly payments. If not, you can actually get penalties for those as well. The reason why is a lot of self-employed people will have like chunks at the end of the year that'll be owed. Well, that could potentially hurt them, or they may not have that money right then. So making these quarterly payments makes that big chunk a little bit smaller and easier to swallow. Anybody ever heard of that? We don't take big bites, right? Because we choke every time. Everybody agree? Okay, so when you think about your money that you owe when you're self-employed, it's kind of the same thing. We want to do smaller pieces, so it's still the same amount over the time, but it's not hurting us all at once. All right, so these are some of the basic things that I want you to know. So this is the standard deduction chart for this year. Okay, so this is always my favorite like conversation to have with people because they're always like, well, I get the standard deduction this year. And that is true. But can anybody tell me what they see on here? Is the standard deduction exactly the same for everybody? Is there only one option for each category? Or do y'all see multiple options for each category? So that even makes a difference. So the ones and twos is how you do it. So your age affects what you can claim for your standard deduction, and as well as blindness. So like if you are over the age of 65 and single, you would get the 17,550 instead of the 15,700. Okay. And then when we get into married, that's why it goes to 4, because now you have 2 different people. So now we add each one for if they're both over 65, or if just one's over 65, or if one's blind, all of those kind of things. So your standard deduction can range from, but typically when we talk about the basics. So you're going to say a single is 15,700 and a married filing jointly is 29,200. So does anybody know the difference between the standard deduction and an itemized deduction? I see some heads. Okay. So standard means that you take this amount of money for your deduction, and that's going to reduce the amount of taxes that you owe. Okay. And that's just a blanket across the board. You get it. I get it. Everybody gets it. Okay. Based on your filing status. Itemized used to be extremely popular before our standard deduction doubled in 2021. And the reason for that is that's where you can claim your home insurance, your interest, your taxes that you pay on your property, your medical and dental expenses. All of those kind of things can be claimed when you itemize. But remember, you want your itemizations to be more than the standard deduction, or it's not beneficial to you. In our system, I can put all of your itemizations in, and if it does not cross the standard deduction, guess what it does anyways? Even if I put them all in, it chooses the standard because it wants you to have the best benefit. Okay. So when you're thinking about itemizing, just make sure, and I'm not saying you can't do it, write it out, figure out which one, but the standard deduction is typically a little higher than it used to be, or it is almost double what it used to be. So it's a little bit harder to itemize these days. The other piece I like to talk about is the credits and the deductions. So a credit, well, hold on, let's start with deductions, okay? So when you go through a deduction, I'm actually going to go to the next page so you can see. These are 1040s, okay? This is this year's 1040s, okay? So this is your basic tax document. So down here at the bottom is where we put in, this will have all your personal information, your filing status, if you have dependents. And then we come to income, okay? And I'll show you different forms for different incomes. We have already talked about 2. Can anybody tell me the 2 I've already said that are 2 different forms of income? Anybody?
W-2 and 1099.
Beautiful. Thank you, Ellen. Yes. 1099 and W-2. Perfect, James. Yep. Those are the 2 that we have already talked about. Okay. Now there's many more, but those are 2. So those would fall inside of this income level. Well, when we get down here to income, there's a next spot for deductions. So a deduction, because people interchange these words a lot, so I like to make sure you know the difference. A deduction is the amount you subtract from your income when you file your taxes, so you don't have to pay tax on that money. So what do I mean? Is once we get through these top numbers up here, our deductions are actually going to be applied down here. Hence the standard deduction. Anybody see the words there? Okay. So this is actually going to reduce the amount of money that you're going to have to pay taxes on. Okay. That's a deduction. It actually reduces the amount of money you have to pay taxes on. All right. Now let's talk about credits. Okay. So with our credits, those can be things like the child tax credit. You can have earned income credit. You can have the premium tax credit. I could keep going, but y'all get the general idea, right? So credits are going to be when an amount you can subtract from the taxes you owe. So now a deduction is before it takes from your income and then gives you your tax amount. Your credits are now reducing the amount of tax that you owe. Okay. And then the other fun thing about credits are some are refundable, some are not. And then also some are partially refundable. Okay. So the old assumption too used to be that all credits are refundable. That is not a fact. Okay. It depends on the credit. And then also you have that piece of partial or completely. So the child tax credit is one that plays with that. For a while, it was only partially. It can be full. It goes back and forth depending on what it is. And that's the fun part of being a tax preparer. Every year, the rule or laws change, and you have to relearn some of the ones you had from the year before. Okay. So that's something to keep in mind. So those are kind of the basics. Also, one of my other favorite things that falls into adds to your taxes. If you're self-employed, you have to pay self-employment tax. So that actually goes into that taxable portion of what you would have to do. Okay. Now, if I have my taxes, I get enough credits that it's more than what I owe, what would I get? A refund. I saw somebody say, yes, I'm going to get a refund, right? Which is great. Or I'm going to break even if none of them are refundable, correct? Which is still a great place to be because that means you owe in. Now, if I get there and I get credits or anything, or I don't have anything, I just have my taxes owed and I didn't have enough taken out of my income for the year, I'm now going to owe. Okay. And that's part of how the system works. So a couple of years ago, the 1040 was a very simple sheet and easy to do, and a lot of people were doing their taxes. In the last few years, they made it way more complicated with extra schedules and those kind of things, which is where me as a VITA preparer comes in and tries to help out, okay? Because I understand those extra schedules, the Social Security benefits worksheet, all of those extra little pieces that now have to be a part of this. But these are some of the basics, and I just like to show them so that you can see the 1040 and the 1040 SR of simple forms that you do have to file every year. And you should have a copy of these from each year, one or the other, not both, depending on which category you fall in your tax information every year. Because this is what, when you go to a bank and then you want to get a loan or anything like that, this is what they're going to want to look at, your 1040, okay? These are our incomes. We talked about two. You already said it, W-2s, 1099s. 1099s are my favorite because do y'all see how many 1099s are on this screen? And these are all different ones, okay? So we have dividends, okay? That's going to be from like stocks, bonds, anything like that. We have interest, INT. You're going to get those from your bank, from those bank accounts that even though the interest rates are not great, you still earned a little bit of interest on your money, so you have to report those. What about from student loans? Oh, that's one of the ones we get interest statements for, right? Because we want to make sure that when we pay those, we have that money. You have miscellaneous, which is going to be any of those jobs that are like OPS, anything like that. R is for typically for retirement. So you can have some things related to retirement that fall under 1099s. You also have your B is bonds. K typically tends to be sales of different things. And then SA is going to be your Social Security, which is this one right here in the center. That's a very common one. This is your W-2, which most of y'all are pretty used to seeing every year. This is one form I actually appreciate. It's almost the same at every institution. I don't know if you can see, but these vary in the way that they're structured. Your W-2s, pretty much every institution has the same kind of looking W-2, okay? So you can easily see what you made for the year here in box 1. Oh, and the second one says federal income tax withheld. So that's the amount of taxes you already paid. So we're always hoping that's a big enough number that we don't have to pay anymore, okay? And then it will tell you the rest on here. This will be your area for like your retirement, your medical benefits, anything like that, okay? And then 15 is always your state. Well, guess what? In the state of Florida, we don't pay state taxes. So if you see anything down there, it'll be like an FL and there shouldn't be any numbers listed. The next part I like to talk about is your W-4 because that's what affects your W-2. Okay, So your W-4 is how you elect what you withhold and pay the government as you go from your paycheck every week or every other week, annually, however, bi-monthly, monthly, whatever you get paid, okay? This is how you choose that. Now, most people do this when you first get hired, and then we never think about it again, okay? But is anybody's life exactly the same as it was when they started their job? Chances are pretty slim, right? I mean, something's happened to us, right? Okay. So things that affect this, because I won't say every life thing affects it, but things that affect your W-4 are going to be getting married, having children, all of those kind of things are going to be where the numbers you claim. Have y'all ever heard the 0, 1, 2, 3, 4? Y'all have heard of that, right? When we talk about W-4s? Okay. So 0 means you have the max number of taxes taken out. That's what that means. 0 means you're claiming no exemptions. You get as much taken out as possible. As you make more, though, remember, you may actually have to add a percentage, which is also on here, so that it covers the taxes you have owed, okay, for your tax bracket. But as you go up in numbers, that's less taxes that are being taken out. So just remember that. Now, for some people, that works wonderful. For others, not so much. So you have to find that balance for you. There is a cool one that can help you. So the IRS created last year a tax withholding estimator. So this is literally a program that you can go into that you put in how much you make biweekly, monthly, whatever it is, and it tells you how much you should be withholding. Oh my goodness. Isn't that crazy? I took all the math out of it for you. You don't have to think about it. Okay. And it'll also ask you other little questions that kind of help you think about things that are going on. Okay. Now, I'm not telling you everything. If you have stocks and bonds and you could get capital gains, that can mess with your taxes that you owe. Okay. But it's not easy to predict that, is it? If we all knew that we were going to gain every year, would you invest? The answer is yes, right? If you knew every year you were going to have a capital gain, you'd be like, yep, I'm investing in that. We're going to do that. I'm going to make money. It'll be great. But that's not how it works. So you have to find that balance for you. This calculator is used to help you estimate your typical income. Okay. So we can't dictate the stock market. Okay. We try. There's a lot of financial people that guess about whether it's going to go up, down, everything else, right? That's how we decide which ones we're going to do. But this one is not used for that. It's used for the general overall. But this gives you a good picture. So please take it, even if you already have your stuff and you're great, if something changes, go drop it in here and just kind of see how it affects you. My next one is always one I like to see is ways to pay and receive your refund. Okay, so refund. If you do it direct deposit, you typically can have it within 21 days. I'll be honest with you, the earlier you file in tax season, the earlier that goes into your bank account. Okay, the longer you wait, you get closer to those 21 days. Do you want to know the current wait period for a paper check? 16 to 21 weeks for a paper check. So it is completely your option which one you want to do, but I'm just letting you know the difference if you're getting a refund. Okay. The other part is if you have to pay. And I know everybody's like, I don't want to talk about this, but for some people, it's reality. Okay. So if you have to pay in, you still have the same options. You can actually have them direct pull from your account, just like they can direct deposit in. Now, here's the cool thing. It's kind of like your bank. When you go to the bank and you pull from the ATM, you put your card in, you put the number in, you pull out money, right? Okay. You only pull out said money. We'll say $60. Okay. We put in $60, whatever. Okay. Can I pull out 160? No, because it wasn't authorized, right? That's not what I authorized. It's the same way with this. When you put in your information, you're telling them they can withdraw $247. Okay. That's all they can withdraw. Once that withdrawal is done, it is done. Okay. So these are things you want to think about. Also, I like to point this out here. Does anybody remember when we started getting the economic impact payments? Okay. And how some of them were going to these ghost accounts is what they called them. Does anybody remember the news talking about the ghost accounts? That all these refunds or all these economic impact payments were going to ghost accounts? Okay. So those are a real thing. So a lot of bigger companies, I'll name a couple because I work for UF, so I don't talk about any in particular, but we could go Jackson Hewitt, H&R Block. Those are the only two that come to mind at the moment, but there's a bunch of different ones that do taxes every year, right? A lot of them have those ghost accounts. What they do is they give you that money right there that day up front, right? Well, that's their money. So do you know what they put into those refund boxes right there? Their bank account information, so that your money now goes into their bank account when you get your refund. So that's where all those issues came up, because that's what happened. So just remember, when you use them, it's not a bad thing. You're right, you get your money right there. But what's happening is that money is now going back to them. They're betting on you getting that return. They did their return right, and they get that money. So that's kind of how that works. If you have to make a payment, make sure that you also can mail it in, but make sure you mail it to the correct place. So there are multiple places that you can mail a check to, and it depends on where you live. In Florida, most of the time we mail to somewhere in Texas. Okay, but if you're having to do an amended or something like that, it changes to another site. So these are things you want to pay attention to. If you have estimated payments you need to make, there's also a different place you pay those. So this can be given to you or looked up on the IRS website, but always make sure you're using the right one for the money that you're paying for. There's different pots of money, just like we have different bank accounts. That's the same kind of way they look at this. All right, here's another one that they started, was it last year or the year before? I don't know, but I think it's the best thing they've ever started. Where's my refund? Okay, so I told y'all I do taxes. Do you know how many phone calls I used to get for this? It'd be like day 16 and they're calling me. Hey, I haven't seen my refund yet. Do you know where it is? So honestly, as a VITA site, and even as like an H&R Block site, once we hit that submit button, I can't tell you where it's at in the process. All I get told from the IRS is that it was accepted or it was rejected. Those are the two options I get. So after that, we start that process, that's all we see. So if you want to know where your refund is, this is where you go. This is the spot. Where's my refund? Okay. It should tell you where in the process you are and give you an estimate. Again, it's going to be a range of days or weeks in which you should expect your refund. So these are prep resources that through the years of doing this, me and other agents have worked together to create. Patricia is fixing to drop a link in the chat box. It is going to take you to our infographic site. When you get to the infographic site, hit the one on the left side of the screen that says Money Matters. Perfect. She even typed it for you. You will see underneath there all kinds of different resources that you can use to help prepare. This one I have on screen talks about Schedule Cs, which is going to be self-employment. Okay, then we have income reporting documents list. These are all the different documents I was just talking about so that you can get an idea of what you need. There are some that are older, like we have one that talks about economic impact payments. Okay, those are the ones like that's not relevant to us anymore. But do you know I can still do taxes back for 3 years? So some of those economic impact payments still have to be reported. So those are conversations we have to have. It also has one about your debt to income ratio. You're probably thinking that has nothing to do with my taxes. No, it doesn't necessarily, but it definitely has to do with your money if you're trying to move forward with anything, right? So all of those are going to have a bunch of different money matters things. So some taxes, some not. The other thing I like to share with y'all is that there are many different free tax preparation options for you. Okay, so you have me, I'm a VITA, Volunteer Income Tax Assistance, but there are many other VITA sites throughout the whole Florida. Okay, you can go to the IRS and type in VITA and it'll pop up every VITA site available. Okay, you also have AARP. I need to make this statement. So with VITA, we have a scope. Okay, so it's things we're allowed to do, and then we have things that are out of scope that we're not allowed to do. Okay, I don't set that. I wish I did. I really do, because there's some things I just wish we could do that we can't, but it is set by the IRS. So I have to follow those guidelines. So if I get somebody and they're out of scope for me, a lot of times I refer them to an AARP site. AARP sites create their own scopes. They are not set by the IRS, so they can choose what they do and don't do. So they're also another free, great resource. You also have the TCE is for the elderly. So VITA and TCE are kind of used interchangeably, but you have to label your program different. And then you have IRS free online file. And then also there's paid preparers, especially for those who may make above the income levels. So those are the things that you have to think about. There's always an income level. All right. So we're a free resource. We have virtual VITA across the state in multiple different counties. And like I said, even in partner with UGA. So if you're interested in having us do your taxes, we do where you have to come see us in person. I know it's so terrible, but guess what? We're happy to do your return for you and make sure that it's ready. We do have different requirements, but it is an option that you can always call and ask to see if you qualify. Another one that we have is the do-it-yourself option. This is called a facilitated self-assist. This link works. Hold on, I'll put it in the chat box too. If you want, you can use this link. The only thing with this link is that if you make more than 79,000, okay, if you do this on any of the other ones, any of the other sites, Turbo, oh, now I can think of a bunch of them. TaxSlayer, TurboTax. See, I couldn't think of earlier. H&R Block. Now they're all coming to me, okay? If you go do your taxes online, you get to the end of it. What is their favorite thing to do? Tell you it's free until what? You get to the end, right? And then it says you owe $32.89 or you owe $75, whatever, right? Okay, so here's the thing about my link, okay? If you exceed $79,000, it stops you in your tracks and tells you, I'm sorry, we cannot complete your return. There is no option to say pay after you've put in the data. So if you know you make more than that, I'm going to tell you now, don't try to use it because it's not going to let you complete your return, okay? But if you make less than that, please feel free to use the link. And just make sure you put in your county you're closest to, or I'm in Columbia. You could always just double Columbia. If you have questions, email me. I'm happy to help you. Okay, we can get on a video chat like this and I can help walk you through whatever pieces you need. So these are also resources that you can use. All right, and then this is my last one. It's 79,000 on the nose. So it's not less than, it's literally like that is less than or equal to. If you cross that 79,000, it says E. It's AGI. Sorry, somebody asked, is it gross income or AGI? It's adjusted gross income. So it's AGI, is that 79,000. Miles asked, would you recommend using the new IRS direct file? You can, yes. All of those things, actually, I do encourage you to go onto the IRS website and at least look, because you may be able to find, they have a lot of free resources. I mean, I showed you like a list of some of the different ones they title, but they honestly have a lot in different categories. Like some are only for certain states, some are for only certain age brackets, some are like, there's all these different things that they're able to provide free services through. So yes, I would greatly encourage you, at least go look. I mean, the worst thing that's going to happen is it's going to pop up and tell you, you don't qualify for any of these. Well, now you're going, okay, I got to do something different for my taxes. But at least it gives you an option. Yes, it's on the next slide. Hold on. Patricia, do you mind putting this link in? Oh, you already did. Thank you. Sorry, I see it pop up now. So this is the link to my survey. It's really, really short. So I'm going to sit here for about a minute and assume that you're all clicking on it and helping me out, because with extension, this is how I continue my job. So I'm gonna, I'm just gonna pause for a second, ask that you do it. And then the next slide is all of my contact info, and then I will begin answering questions. But I am gonna sit here for a second because it's very important for me. And if you've opened it, you see it's a whole lot of questions. No. I actually did a survey yesterday that popped up as one question. And then when I went into it, it started being like 15 questions and I stopped doing the survey. I have learned that if you make it a small thing, it will be a whole lot easier. Massive never gets you anywhere. Most of the time you need the general data, not everything. All right, so this is my contact. There's my email, my office number, and also I told you I'm an accredited financial counselor. UF IFAS Extension has quite a few accredited financial counselors that are agents that we offer free counseling services through UF. So this is the link that you can also click in order to, it has a form that you have to fill out so that we know how to contact you, when to contact you, what you want helpful information on, all of those kind of things. And we will contact you and set up an appointment to do a one-on-one counseling session with you. So that's always another option for you as well.
Okay, well, thank you so much, Haley. We have a couple of questions if you're ready to move into the Q&A part of it.
Yes, ma'am, go ahead.
Perfect. So I feel like you've already answered this with 78,000, but it came through. Is there an income requirement to be able to use VITA? 79.
Yes, and some VITA sites are more. Ours is a little more limited with UF because we have a grant, and so I have to serve a certain amount at certain incomes. So sometimes you can even find some that'll go a little bit higher, but it is typically a resource for the lower income is what VITA is designed for.
Can VITA assist non-resident aliens tax filing 1040 NR?
So unfortunately, most VITA sites cannot, but there is the site on campus that handles those kind of things. They do have a VITA partner that I think helps them with some of those. So reach out to the actual place on campus.
And Brian just mentioned that W4 allowances are no longer used for the new version of the form. Want to comment on that?
I don't like that, Brian, but okay. He laughed. So what do y'all assume us as then?
Brian, do you want to jump in? I don't know if he's still with us.
Yeah,
I'm
he's
sorry,
there.
what was that?
So what do you, if we can't pick our allowances, then what do you assume me as?
The assumption is single with no other elections.
So it's one.
No, there's no one. There's no zero, no
single-
one, no two.
Single is one. So the only zero is where you claim no exemptions. If you claim single, that's a one.
Well, on the old W4. The
Okay.
new W4 does not have number of allowances on it anymore.
I love it. Okay, so we're assumed zero. So that's actually good for most people. Okay, that's awesome. This is my favorite discussion between me and my husband because I've always claimed zero. So I have the max taken out so I don't have to handle it. He likes to claim higher numbers. And for a few years on our taxes, guess what it did to us? It made us owe. So it was a lot of fun. But remember too, Brian, even though there's not the allowance numbers, if you hit certain brackets, you may have to have more taken out of your check in order for you not to pay in. And the W4 should still have where you can have more taken out. You just have to elect for it. That's an actual election, okay? And most of the time it's a percentage. You can put a dollar amount, but most of the time it's a percentage. So remember that too. If you play in that W4 estimator and you need more taken out, make sure that you do actually make that election. Because if not, chances are you'll have to pay in it at the end of the year.
We don't
Okay,
accept
so-
the percentage election on the W4, but we will accept an additional extra withholding dollar amount.
Perfect. Yep. Every company is different. I'm sorry, Brian. I know I'm talking to a UF group mainly, but I don't like to get, like only dependent because if they have a different job, they may need to handle it a little different. So every company does it different. Retirement only do by percentages. So all 1099Rs, they like percentages, not dollar amounts. So that's another one to think about too. I've had quite a few clients I've had help with those things. Go ahead, Patricia. I'm sorry.
Going back to the VITA tax income thing. If my spouse and I make more than 79,000 combined income, are we eligible?
No, the 79,000 is across the board. So no, VITA would not be your option. But as Miles pointed out, there's lots of other options that you can go on the IRS website and look for. So I would strongly recommend you start there. And then if you can't find something, AARP sites typically don't have income limits and still do free tax returns. So that's another great one for you.
Can you clarify on the W4 when claiming a dependent credit, let's say one child for 2,000, whether both spouses should claim it on a W4 or not?
So that's where it gets a little fun. That's more of like a preference and money thing. So like there's technically not that you cannot both claim it. Technically only one of you is supposed to. One claims head of household, one claims the child, those kind of things. But know that if you both claim it, that's just more that you're not paying in taxes. So it could hurt you. Which it sounds like Ryan says we don't get the option anymore anyways. But if you have another one, that would be, that's how you have to look at it.
There were some questions about sharing the slides in the recording. As we mentioned at the start, the webinar is being recorded and we will be uploading it to the financial literacy website. Jordan, if you can help us with dropping the link to that where that webpage is located, and it'll be uploaded hopefully by the end of the week on Friday, and then you'll be able to go back and look at the webinar, and I'll link to all the resources and Haley shared and all that. Questions. My spouse does not work in the US and I am a PhD student. Should I file jointly or separated?
So, okay, jointly or separate. Okay, so I'm not going to get extremely specific on that. If you want to email me separately, you can, and we'll talk more about your situation because that's where that gets different. But here's the general difference between filing married and filing separately. Okay, so when you file married jointly, you have more options for credits. So you are still allowed for the premium tax credit, you're still allowed for the earned income credit, all of those kind of things. When you opt to married filing separately, you lose access to those credits. So for some people, if they're not going to get those credits anyways, married filing separately, married filing jointly kind of plays out evenly. For those that would get those credits, a lot of times if you married filing separately, then you actually will end up owing or you don't get any money back. It plays into that kind of piece. So that's one that you want to think about. Also, when you're doing married filing separately, remember if one spouse itemizes, the other spouse has to itemize. So that's something to think about too.
Okay. For someone that is deceased, would we submit their W-2?
Yes. Yes. So if your spouse died in the year of the tax year, you're going to file married filing jointly still with their information, except now we're going to say that the person was deceased. And then after that, depending on if you had children, anything like that, your filing status could be different. But for that first year, as long as they died within that year, it's considered married filing jointly. Or even if they died at the first of this year, you would still have been married filing jointly. So yes, you would file with their return or with their W-2 as well.
I think Brian kind of answered this in the chat, but somebody asked, I have 2 freelance jobs beside their UF job. What should they do?
So you're gonna well, I'm sorry, I don't know what Brian answered.
He
He
recommended
said to
they
use
use-
my tool. I love it, Brian. Okay, yes. So using the tool is going to be a great one. If you're not having anything withheld, depending on how you're getting paid from the freelance jobs, most of the time that's going to be a 1099, and most of the time they're not going to withhold taxes. You can sometimes ask them to withhold taxes, and some companies will do that. Some companies will flat out tell you no. So then it becomes your responsibility. So my advice then is to use that calculator and to put some of that money in the savings, because when you file your taxes, guess what? Those taxes are still going to be owed.
Okay. If I were a non-resident alien for tax purposes and then became a permanent resident in the middle of 2023, would VITA be able to help with taxes in this situation?
I'm going to be honest with you. I would have to look that one up. So I know, because a lot of them are like, it would depend. And that, okay, so I'm going to say that would have to be an email one, because it's also going to depend on the amount of time. So, and I would have to look it up. A lot of times if it's like you're more than 6 months one than you were the other, then you have to file the one way. Does that make sense? Kind of like states. So like I file for people who are snowbirds. Anybody ever heard of snowbird? They come down from the north and visit us right now while it's cold. Okay, so I do a lot of snowbird taxes. Okay, but I have to know when they lived, when they're living here, like dates to when they're living there, because I have to know whether they qualify as our resident or whatever state, North Carolina, or I mean, New York, Ohio. I could keep going. You get my point. So that makes a difference. So a lot of times it comes to that. Marriage is the same way. So marriage, though, is if you're married on the last day of the year, they consider you married the entire year. So those are kind of where it plays into. So that would be more like I would need more details. Does that make sense, Patricia? To really be able to give a good answer.
Yeah, and your email is right there, so they can, yeah, and they dropped the comment that they would shoot you an email for that. I am on an F1 OPT visa status and working as a postdoc at UF, and my spouse is on an F2 visa and lives with me. She does not have any income. What should be my tax withholding options?
Your tax withholding or your tax filing options?
She said withholding options.
So
If I could just add, for anybody that's on like an F1 visa, the International Center here has someone who can help you specifically with taxes.
yes, they
F1
do.
and J1 visas.
Yes.
Yeah.
And I would strongly recommend you go there. I actually send any clients that I have that come to me to him. If I can, I would have to find his email to remember his exact name, but we have had conversations, is how I'll say it. So I would definitely recommend you go there. He's great.
Yeah, they've been dealing with this for many years. So if you're an F1 visa or J1 visa or a Fulbright student, because we might have some of those here, they can definitely help you over there.
And it's on campus, easy and convenient.
Is the campus Vita side of the
So-
law school?
Sorry, could you repeat where to go if we have a J1 visa?
International Center, the UFIC, the UF International Center.
Okay, thank you very much.
Okay, so is the campus Vita side at the law school?
So no. So I'm not a campus Vita site. I am the UF IFAS extension Vita site. So those are two different things. So I work for extension. I'm a piece of UF. But no, my sites we have one in Columbia, which is me. There's one in Pinellas. There's one in Hamilton. There's one in Marion, Nassau, Hillsborough, Wakulla. Now y'all are really testing me. I have 19 sites between UF and UGA. So I think I just named 7. That's as much as I got at the moment. I'd have to pull up my list to get the full. So I apologize if I left a county off, but we're kind of throughout the state.
Next
I'm
question.
probably y'all's closest though. I probably am.
Yeah. My spouse does not have a permanent residency and he's being asked for a TIN. What is that?
So he should have some kind of number, a TIN number. I'd have to look up the exact verbiage for that to make sure that I said it right. But it's essentially like we have a social security number. The TIN number is the number that they give for the non-resident. So it would be something you would be required to file. It's just like a social. It's kind of how your mindset should look at it when it comes to filing.
I am still working and just got a Social Security retirement check without taxes deducted. When I pay taxes on the amount I receive from Social Security, will I be fined if I send it by April 15th?
Okay, hold on. Where's that one at? Or you may have to read it one more time.
So still working here. I'll just copy paste the question because I just copied it.
I'm sorry.
go.
It was a lot of words at one thing. Still working, without taxes.
There you go.
Okay, so that depends. And I know that's the answer you love to hear, but it's a true fact with taxes, okay? Because your Social Security itself is technically non-taxable. But if you have other income that puts you in an area that can make it taxable. So now you're probably thinking, what are the crap are you saying? So there's a Social Security benefits worksheet, and the quick dirty version is you essentially take your income plus half of your Social Security income. It's not exactly half. That's why I said quick and dirty. Okay. It's literally a percentage, but somewhere around half of that. And you are going to add that to your income. And if it crosses a threshold based on whether you're single or married, then you will be taxed on a portion of what crosses. Did you kind of follow that?
I did, but I'm not sure if the person's still on.
Okay.
They can go back and look at it. There are some questions about when taxes are due. Your website says April 18th.
Oh, that's a me error. It's still April 15th. I'll go change it today. I'm sorry. I'm human. Forgive me.
Okay, and I think Nancy asked if that question about the deceased person, was it the W-2? If a deceased person, do you still file their W-2?
Yes. Yep. We
Yes.
answered that one. Yes, ma'am.
Okay, any more questions? 'Cause those were all the ones that I recorded. Let me see. Let me go back to the top and check real quick. Also, Brian, thank you. He's been like helping field some of this questions.
Yeah, but I appreciate it, Ryan. And it's nice to learn the new things that like at HR level, because as an extension person, I don't work in HR. So it's nice to learn that like the W-4 is now something I can't change. I'm hoping that'll benefit a lot of people if you want the truth. So
Okay, I don't see any more questions. So with that said, oh wait. Yeah, that was just Brian. So with that said, Haley, thank you so much for sharing this valuable information with us. As I mentioned earlier, this is being recorded and we will share the recording with you guys by the end of the week. You can all expect an email from all of us, from me, I should say, with the link to the recording as well as a link to a survey from the work life unit. That's it. Anything else you might want to add, Haley? You want to plug
So
in?
if you have any questions, feel free to email me. I'm happy to help as much as I can. And I thank you all. Like I said, if you have more specific, definitely email it. It just makes it a little bit easier because even though our taxes all essentially are the same, they still all have their little differences.
Perfect. Well, thank you, everybody, and have a great day. Bye.